Hello, everybody. Welcome to Fitch Nights by Eureeca. I'm Nancy Tabara, Senior Investor Relations Manager and moderating the event tonight. Joining me tonight are four businesses pitching their businesses, including Odondo, which is currently in live phase, past 80% target raised. Yeah, Odondo is currently reimagining how customer service is delivered in this day and age. You might as well have heard about Mr.Draper, who is currently also fundraising on our platform. Mr. Draper is a first mover when it comes to personalization of fashion, primarily for men. Down the line, also going into women's. We also have Fitch Tech, which is a holistic platform for digital marketing based out of Dubai. And we also have Shugah, which is a one-stop shop to help you celebrate and organize all your celebrations. So we'll start off tonight with Mr. Draper. Joining me is Mahmoud Gao. So Mahmoud, the floor is all yours. We'll start with a 10-minute pitch as usual, and then go on with Q&A.
Great.
Thank you for joining us.
Thank you guys for having me, and thanks to everyone for attending. Before I kick off, just want to introduce myself. Again, my name is Mahmoud. I am the founder and CEO of Draper. I come from a management consulting background. I grew up in the US. I did consulting for about 4 years before doing something completely crazy, where I quit my job in the US. I sold all my things, and I left and moved to Dubai to join the largest luxury retail in the region, Shugah Group. For me, it's an amazing opportunity to work with some of the world's greatest brands like Ralph Lauren, Lacoste, Louis Vuitton, Michael Kors. And it was there for me that I really got to witness firsthand the customer experience that was being provided to the luxury consumer. It was super personal, it was curated, and customers had direct access to sales assistants on the ground who they'd communicate with via either SMS or WhatsApp to get pictures of the latest collections that they had in the shop so that the customer could come and make a purchase. Now, I know that sounds a bit primitive, but I could already start to see how technology was going to play a role in shaping what a great customer experience was going to look like. So that's when I got together with my co-founder, Ogbek, who himself has recently exited a startup himself, and he came from a machine learning background. So together we started to dream up what the next wave of online shopping was going to look like. And the timing was perfect because, as you know, in the region, brick and mortar was no longer seeing the growth that we were used to. In the US, some of those well-known brands were either shutting down shops or filing for bankruptcy. And at the same time, especially in our region, e-commerce as a percentage of total retail was growing at a rapid clip. But we didn't want to build another online shop. We knew that being online worked great for some industries like groceries and beauty. Apparel actually struggled. There are $1 billion worth of returns every single year in apparel e-commerce due to either fit, lack of personalization, and the customer simply wanting to touch and see items before making a purchase. So that's why we launched Mr. Draper. We were on a mission to combine data and technology to deliver that same luxurious shopping experience that I witnessed at high-end brands to the everyday customer. So let me start by walking through how our service works. You start by creating a profile on our app or website, sharing a bit of info about your stuff. So you tell us about your style, your sizing, your brand preferences, and budget preferences. And then we use this data and run it through a proprietary algorithm. And our stylists with the algorithm start to work together to put together outfits that are specific to you. And we get that sent over to your home, which you get to try on in the comfort of your own home for 3 days. You keep and pay for the items that you love, and then you can send back the rest. But what's super important here and what truly differentiates that is that with every return, you tell us exactly what you like, what you didn't like, and why you didn't like it. So this gives us data that at scale creates a network effect that drives efficiencies across the entire business. The more data that we have, the smarter our recommendation engine gets, the more items customers end up keeping per box, and the better the overall customer experience, which means they're going to shop with us more frequently and they're more likely to refer their friends. And at the end of the day, because we are relying on our existing customers, we get the profitability faster because we're not spending money to acquire new customers. Now, if you look at the market, globally, the model has been proven. Stitch Fix launched in 2010. It started with women's and since expanded to men's, kids, maternity, and big and tall. In 2017, they IPO'd and currently have a $4 billion market cap. Their competitors, Trunk Club, also based out of the US, got acquired very early on by Nordstrom, which is a luxury department store. They got acquired for $350 million. And in Europe, a series of mergers and acquisitions led to the market leader, which is called Outfittery, who also started with men's and recently ventured into women's. They're now doing $100 million in revenue. Mr.Draper is pioneering this model in the region. To date, targeting only men in the UAE, we've generated $4 million in revenue from 14,000 orders, 30,000 products sold, and from 6,000 customers. And it's because we've gotten so good at understanding our customers. We have a very loyal, sticky customer base, and that's helping us achieve metrics that are significantly outperforming what we typically see in apparel e-commerce. By the way, whoever is making noise, if you can just mute yourself, that'd be great. Now, going back, for us, we looked at the UAE as a great launch pad for our service where we got to test and refine our model and build out our technology. Now, we know it's a relatively small market, but it was a great way for us to refine the model and make sure that's working. So now with an experienced team, scalable technology, and the relationships we've developed with our suppliers, all the pieces are really in place to replicate what we've seen in terms of success in the UAE across a $50 billion apparel and footwear market in the region. And that includes $1 billion that's happening online, and that's been growing 32% for the past 5 years. And the next stop for us is obviously the Saudi market, which is the biggest market in our region. And we already have a plan that's in motion, that's in place. Licensing is already started. We finalized the terms with our operational and last mile partner in the region. And because 80% of the brands we work with have distribution rights across the GCC, we're ready to get inventory in our warehouse at launch. Our site, our app, and all our communication has been localized. And we already have an in-depth go-to-market digital strategy that's been customized specifically for the Saudi market, which is set to build on the awareness we've already generated during a pilot that we launched in 2019 that got us 60 active customers in Saudi with an additional 1,600 signups that are on our waiting list. So to fuel that growth, this is the money that we're raising, the 1.5 at a 7 million pre-money valuation, with two key initiatives in 2022. Obviously the Saudi expansion and a pilot project that we're working on with Aldar, which is a leading mall operator in Abu Dhabi. And we are building a digitized concierge using the technology we already built for their malls, more specifically Yas Mall. That's going to get us to 12,000 orders and $3 million in revenue in 2022. And that's going to give us the momentum to raise another round at a Series A that's between $5 to $10 million. That's going to help us launch our women's and kids verticals in two markets, the UAE and Saudi. With those expansions in place, by 2024, we'll get to 89,000 orders and $24 million in revenue. So I'll stop there in terms of the presentations. I want to leave a lot of room for Q&A. So let's get started with that.
Thanks, Mahmoud. You mentioned from a barriers to entry point of view, is your technology, as you call it, defensive moats, is that proprietary tech? And can you comment on whether this is really a sort of barriers to entry, or what, in that sense that you're working on personalization for menswear, but is it really proprietary and can it act as a barrier to entry?
That's a great question. So yes, our technology is the barrier to entry. Now, there's two sets of technology that we operate. So of course, the algorithm, which I discussed in detail, which is taking the data from the customer, the product, and the customer's feedback on the product, that's fed into the algorithm and helping to personalize the experience. What that ends up doing at scale is it reduces the dependency on human stylists and does the majority of the work for them and streamlines that process, which will lead to profitability. The other set of technology, which is probably in the market overlooked, is our operational tech, which includes a CRM, an inventory system, logistics dashboards, analytics and reporting, digital wallet. And this has been built specifically for this business model, and we've been building it for the past 3 years. That streamlines a somewhat complex operations quite easily. So if you think about the business, we're taking customer profile, we're feeding into an algorithm, and we're picking items for them blindly. We're sending it to their house, so we have to monitor where the inventory is. It's coming back. We have to monitor us back. Then we're charging the same card they initially used to start the service. So it's like a complex model that we're streamlining with the technology we built. And it's a good segue into how it is a defensive moat and what happened in a real life scenario. 2019, I believe, a e-commerce business, I won't mention any names, which is in the mass e-commerce, decided to pivoted into our business model. They use their existing technology that they had for e-commerce to try to do what we do. And then within 6 months, they did men's, women's, kids, and they did it across the GCC. But within the 15 months, they went out of business. Now, I interviewed a lot of their team members who were obviously, unfortunately, looking for jobs. And what we realized is that the reason that they went out of business is because they had no view on their inventory and they had no view on their customer. And they were basically picking blindly from their e-commerce store to service the customer. And the customers were returning most of the things. So unit economics made no sense. And that is basically a defensive mode that we saw live in action take place, where the business, although they spent a lot of money on marketing and got great awareness, went out of business within 15 months.
Okay, thanks. I have to ask you, related to that, which you brought up, the same point, which is the CRM and operational stack. Can this down the line be sold to like the large retailers, let's say Altair and let's say whatever, to basically to use your CRM operational stack for their in-house retail or for their warehouses? In that regards, can it be basically another revenue generating item, is just you selling your operational stack to these conglomerates or fashion houses or retailers?
So yeah, look, the technology is very useful for a retailer. And I think if we're going to get acquired down the road in 2024, we'd be acquired because of the technology and our ability to deliver this business seamlessly and personalize the experience across channels for their consumers. Is it a separate business line? It can be, yes. And we've actually set up an entity to have a software as a subscription business for these retailers. But it's not our focal point at the moment. We're focused on going direct to consumer. But investors who are investing in this round are investing in the holding entity that owns both the SaaS entity and the direct to consumer entity, because that is a potential opportunity for us in the future, but not one that we're exploring right now.
Okay, sure. Thanks for that. I guess in addition to that, it's interesting that you mentioned that the new project you're doing with Aldar. So it's interesting to see that also your technology is being used to generate footfall for malls as well, which is quite interesting for in our region, because with the new supply of malls and the drop in people going to stores. So it's interesting to see that they can actually utilize your technology for another on a strategic level to actually drive a footfall for the overall mall, for their overall malls, basically.
Yeah, I mean, thank you so much for bringing it up. I mean, that's a really great point. And for us, that is a pilot on the SaaS side, although we're not calling it that because we are operating the store ourselves under the Mr.Draper umbrella. We're just working out the final details. But yes, I mean, basically what's driving that business and what got us to pilots in the first place is the fact that we have this technology. And they wanted to utilize it to exactly bring a different experience to the mall and drive traffic to that experience. So it is a use case. So thanks for bringing that up. But again, like it's a potential different business model for us in our back pocket that we can leverage in the future.
Yeah, it's worth leveraging, I believe. And moving on to since you've been operational since 2006, let's say, what have you seen? I mean, we've all seen the growth in e-commerce and online shopping, but really, has anything changed when it comes to personalization or personalizing the online shopping experience in the region? If you can just comment on that, because I perhaps nothing has changed since then. As you mentioned, there's many platforms and companies outside, but in the region itself, personalized shopping has not taken off yet. Is that your view?
So yeah, exactly right. Like e-commerce is taking off. It's doing well for a lot of industries. Again, the grocery being a big one, food delivery being a big one, beauty to an extent. And now, in terms of a direct competitor, we haven't had one. Like we launched in 2016. We've been building the technology. I'd say like we were officially operational late 2017, 2018. And like really got to scale 2019. Then COVID happened. Obviously, with nobody going anywhere, they didn't need clothes for those kind of events. The business was affected. We did about $900,000 in sales in 2019. We did 560 in 2020. 2021, we'll get closer to like 650 as we're like slowly coming back. So for the most part, we haven't had direct competitors. Except the company I'd mentioned that came in and then went bankrupt within 15 months. But more recently, I would say in the past 9 months, 3 competitors popped up. 2 focused on women only, and 1 focused on men and women. But again, very, very green, very early, but very exciting at the same time, because it shows that there is a need in the market and that space is taking off. And we're proud to say that we've pioneered it and we've built the technology to run it, and we are the first movers, and we're raising this money to take market share and kind of claim our space as the pioneer in the business model.
Okay, thanks. You mentioned that basically, or I understand that now, I mean, you're doing, or the difference between drop shipping and hold your own inventory in that sense that now you hold a combination of consignment, wholesale, and your own label. But down the line, can you comment on where you see the growth? Is it within having your own label, for instance, or I mean, how would you want to segment the revenues going forward?
Yeah, so like drop shipping for a business model like this, although it's potentially good for working capital, is operationally complex. It's not great for the customer experience, and operationally, like from a profit and loss perspective, is not very profitable because you own very limited commissions on that. So we won't go down that route. So exactly as you said, like we have 3 arrangements. We have a wholesale arrangement where we're buying inventory upfront. We have a consignment arrangement where we are taking inventory and we are only paying for it once we sell it. And if we don't sell it, we send it back. And then we have private labels, which is very interesting for us, where we're taking the data of our most successful styles and we're replicate them and creating our own brands under our own umbrella. And we're adding those to our boxes, which is great because the quality is the same as what you see with brands and the price point's even better. Now, going forward, the way that we've modeled out the business, we'll do a 40-30-30 split, 40 wholesale, 30% consignment, 30% private label. And a lot of the growth is going to come from a margin level on private label and wholesale.
So I guess, yes, as you mentioned, the higher labels would be the higher revenue, the higher margins would be from your own label, basically.
Private label and wholesale, like because we have these great supplier relationships, and because if you look at like the retail landscape, the brands are consolidated under different families. Mm-hmm. If you have great relationships with one family, that family could have 15 to 20 brands. And if you go get a great deal on one brand, you can get the same deal across the entire portfolio. And that's where we benefit. We've been in the market for a long time. We have these relationships, and with Fuel, we'll take advantage of those relationships by optimizing our margins and then optimizing our credits, I guess you can say, like by the time that we pay. Ideally, what we want to do is sell things before we have to pay for them, or sell the majority of them before we have to pay for them.
Okay, great. There's a few more questions, but if you can touch on you going into the women's market, how challenging would that be? I mean, it's quite lucrative. I understand why, myself being an online shopper, and there's a lot of returns when you make an order and you want to return stuff. But I mean, I guess it's lucrative as well, especially in the GCC or market as well, in going into Saudi as well. So how easy would it be going into women's?
So look, I'm not going to hide it. I mean, complete transparency. I think like the women's vertical is going to be more complicated. There's more body types, and there's more body types and more categories that we will have to offer. But what's completely the same is the way the business is run, like operationally, and the technology required to run it. We've already started training our algorithm on women's data using open source libraries to start predicting what women are going to want to purchase. Now, so like from a technology and operational standpoint, it's the same. What we'll have to do for women's is build a different brand, Mrs.Draper perhaps, and add more brands and more categories to fulfill the need. Now, typically what you see in the women's vertical is that they shop a lot more frequently than men do, but they spend less per trip. So with what we're seeing holistically in the GCC, with Saudi women entering the workforce and majority of the women that live in the UAE working, we think a service that's personalized and super convenient is going to play a key role in how women shop going forward as they enter the workforce. And that's what we're building for.
Thanks. Last question, they're asking you about revenues in 2020, 21, and if you're breaking even at the moment.
So 2021, I think I mentioned this earlier, we did 560 in 2020. We'll probably do it 650 in 2021. This is in dollars, so $650,000. And then the break-even point in the business as per our financial model is 2023. It's actually profitable. So it's post break-even point.
Oh, okay, great.
Thank you, Jed. Thank you, Paul. You're the man, Paul. Thanks for being an awesome.
Yeah, you can see that he's a loyal customer and loves the concept as well. Well, it's interesting to say, I mean, again, to all the viewers that although it's a tried and tested model outside in Europe and Germany, as you mentioned, in the US, like Stitch Fix, it's actually a first mover in the region. And yeah, from an investor point of view, I guess it's quite interesting because you're literally just capitalizing on an untapped market or the upside going forward.
Yeah, exactly. As an investor, like you would be coming early now. I mean, of course, every startup is a risk, so that's something that should be mentioned. But there are two opportunities for potential investors to exit right now because you're coming in early. One is in the second round in the Series A, where we could be raising at a $25 to $35 million valuation. So if you're coming in at a 7 million, you're making the difference. So an investor would be buying your shares through secondary shares, or if Eureeca is going to offer that service in the future, that'd be fantastic. And then obviously what what we're building for essentially is that we're building personalization across channels. A retailer in the region that's already on the path to digitizing their services and their products and their brands are going to look at us as an acquisition target. And we anticipate that to happen as we get to scale. So if we're doing 25 million, you can anticipate 4x of revenue to be the valuation of the business. And we could potentially get bought out by one of these or exit to these retailers at a multiple of 4x revenue, which is 25 million in 2024 valuation. So you could, if you were to hold out, not exiting in the secondary shares in the Series A, you would exit when the entire business exits at multiples on the money that you put in.
Great, thanks. And of course, the whole the second round of valuation also includes you going into women's and this prospects into the women's market. Saudi and the women's market is key for you next.
Exactly.
Okay, great. Well, thank you so much. So for everybody, you can click to invest. You can see the link in chats, and you can also, as always, email me or email investors@eureeca.com. So I'll move on to our next company fundraising right now, which is Odondo. So
good evening, everybody. We're just about to share the screen.
So hi, Amir and Bobby again. Nice to see you. Thanks for joining us tonight.
Thanks for having us. Thanks for having us.
It's all yours, guys.
Excellent. Well, look, thank you, everybody. And thank you for having us, Nancy. My name is Bobby. I run Odondo together with my co-founder, Amir. Amir started his business as a management consultant before joining Energy Helpline as the CTO and COO while the business was in its infancy. And he was instrumental in scaling the business to become one of the top 3 energy comparison websites here in the UK. And a couple of years ago, he successfully exited the business to private equity before joining Odondo as co-founder at the beginning of last year. I began my career as an investment banker. I spent 11 years doing M&A for a range of banks, including Morgan Stanley, HSBC, and Lehman Brothers. And I left banking in 2011 to co-found an e-commerce business, which I ran for almost 5 years, and it was very interesting listening to the last pitch. And part of my remit in that business was the oversight of the customer service function. And it was this experience, not always a fun experience, that sowed the seed for what later became Odondo. So I originally co-founded the business together with the venture capital firm Hambro Perks, a leading venture investor here in the UK, who helped to incubate the business. We're an early investor before Amir joined as co-founder early last year. There was a number of reasons that, a number of factors that attracted both Hambro Perks and I to the opportunity in the first instance. The first is the sheer size of the market. The customer service market is enormous. It's worth about 270 billion pounds globally, and it continues to grow. Secondly, customer sentiment and customer service interactions are of growing importance to companies and occupy an awful lot more C-suite headspace than they did in the past. And the third is the fundamental belief that the traditional model of delivering customer service, whether that's done in-house or through an outsourced partner, is fundamentally broken and suffers from inflexibility, low quality, and high cost. And these issues are endemic across the sector. They affect all key stakeholders, from companies who are trying to talk to their customers, through the agents talking on their behalf, right through to the end customers themselves and the experiences that they have. And so, we set up Odondo to address these issues and reimagine customer service delivery. We developed a platform that matches a network of gig economy home working agents to clients on demand. These benefits are largely unlocked by our gig economy model. Unlike a traditional outsourcer, our distributed model gives us access to a wider and more experienced talent pool. So we can source agents specifically based on client requirements, resulting in a higher quality agent at the end of the day. So agents can have a mix of, curated mix of language skills, system experience, or indeed industry knowledge. Also, the gig economy model means that we don't sit on a fixed agent cost, and it allows us to dial up and dial down resources to match the demands of a client's business. So clients don't get left sitting on any wasted cost. Again, because of the gig economy model, the fact that we don't have a physical infrastructure, we can provide the service at a significant discount to traditional outsourcers. Odondo has developed a proprietary platform to deliver our managed service to clients. It serves as a hub for agent activity and campaign administration. We've served over 40 clients to date, including a roster of some of the UK's largest, most innovative companies. We develop very strong relationships with clients, and they produce durable and growing revenue streams. Notable clients include Firstport, who are the UK's largest property management business, Acorn, a leading specialist insurance business, and the Cotswold Company, which is a large online furniture retailer that we've worked with for now coming up to 18 months. Odondo's asset-light business model means that it's highly scalable and can flex rapidly to support surges in client demand. By focusing on customer service mandates rather than outbound sales mandates, we engage clients in long-term relationships and have relatively low client churn. The unit economics are very, very attractive. We charge a client per agent per hour. We pay an agent per hour, and this delivers a blended gross margin of about 35% currently. And we expect that to increase to sort of mid-40s at scale. Our managed service has provided overwhelming proof of concept to date and delivered significant traction. We have actually, now that we have visibility on November revenues, I can give you a slight update to this slide. We've generated a year-to-date revenue of £1.3 million. Grown revenues almost 4x since the beginning of the year, and we've increased our gross margin from 24% at the beginning of the year to 36% today. So some really good growth and margin momentum. However, a key component of our growth strategy going forward is the rollout of a self-service platform, and it's something that we call internally customer service in a box. And it will address the huge long tail of SME clients that are currently priced out of customer service outsourcing. And we envision a world where we're part of the broader business building ecosystem and become the go-to people for the customer service part of a company's proposition. So for example, if you're building an online retailer, you might go to Shopify for your storefront, Salesforce for your CRM, Stripe for your payment solution, and Odondo for your customer service proposition. And depending on the individual client use case, that could use Odondo agents, or clients could use our tools and technology to manage their own in-house customer service workforce. We will, however, maintain the existing managed service for larger clients or those with more complex use cases. We forecast very strong growth over the next couple of years. Growth will be driven by a range of factors. The first is an increase in the price per hour that we charge clients as the legacy effect of some early promotional pricing washes out. And secondly, new client acquisition. So we will both increase our penetration of our existing client demographic in the UK, and then through the rollout of the self-service technology, we will address a new client demographic, which is this SME market, who've been priced out of customer service outsourcing to date. Thirdly, we will grow the business through international expansion. There's nothing in our model or in our target market that is unique to the UK. And we believe that the model transfers and travels very, very well across jurisdiction. Even though we are UK-centric today, we have actually done quite a bit of work for overseas clients. We've had clients from the US where we support their European customer service. We've a client in Australia where we support their European customer service. And we've been able to deliver actually quite an eclectic mix of languages. So over the past 12 months, we've done engagements in English, French, German, Spanish, Italian, Dutch, and Hebrew. So we have quite an international focus even to date. The dynamics of the business mean that we quite quickly get to an inflection point where our gross profit exceeds our overhead. And we expect the business to break even in the first quarter of 2023 and ultimately generate EBITDA margins in the mid-teens. The ship is steered by an experienced and driven management team and ably assisted by a range of advisors that we've carefully curated based on their backgrounds and breadth of experience.
Hey, Bobby, sorry, just 1 second. Some of our the viewers are saying if you can refocus the slides and not the speaker because they can't see the full slides. They can see.
I'm not quite sure what you're getting out there, Nancy.
Yeah, I think it's fine. I think I just need to. I changed the view, so it should be fine. No problem. Sorry, Bobby. Sorry about that.
Okay.
Oh, perfect. It's fine now. Yeah. Thanks.
So we're raising this round to support our our growth plan. We're raising £1.2 million at a pre-money valuation of 5.5 million. That will give us runway for approximately 12 months and will enable us to hit some key milestones. We're currently backed by, as I think I already mentioned, the venture capital firm Hambro Perks and several leading angels. Hambro Perks are following their money in this round, are investing £200,000. And we've secured commitments of a further 360,000 from both new and existing investors. The use of funds will be broadly split across three key areas. Firstly, the development of our technology platform and the building out of our technology team. Secondly, the build out of our sales function. We've run a very, very lean operation on sales to date, and we want to build that out to support our client acquisition strategy. And then finally, there will be some hires in the operations team to support the business as it scales. I think with that, I will throw open questions to the floor.
Thanks, Bobby. You mentioned, that of course, Odondo, at the heart of it, you're really focusing on customer service delivery, regardless of any industry, and that you're really industry agnostic. But in reality, really, I mean, how easy is it to really plug and play your services across, various sectors with different needs? So if you can just comment on that.
Sure. I mean, I think that the reality is that as long as there is a customer there to be spoken to, actually there's huge overlap irrespective of industry. So we've had probably in the last 12 months, unsurprisingly, a bias towards e-commerce. It's a sector that's grown really, really rapidly, and we've been able to support the scale up of companies' customer service operations. But equally, we've done work in other spaces, and although the end conversation is slightly different, the philosophy and the skill set is actually quite similar. So we've done a lot of work in the property management space, a lot of work in the insurance space, and actually the skills that the agency have are very, very similar. The skills that we need as a business and a process oriented business are very, very similar. But what we can do is actually curate that industry specific skill set by engagement. So what we do is when we get a mandate from a client, and we appoint an account manager, and then we do a sort of a short discovery piece of work. But there we profile the right type of agent for a given engagement. So that could be certain language skills, it could be certain CRM experience, it could be certain industry knowledge. We then look to our existing agent base to resource that, and if that skill set or profile exists there, fantastic. But if it doesn't, we can go out and recruit specifically for that client's needs. So we can deliver a very curated, very high quality agent experience.
Thanks. Related to that is that in that you usually recruit, do you have an in-house supply, or you have a go-to-market strategy when it comes to, because as you mentioned, some clients may be more specific in terms of their needs and some are more basic in the sense that they just want a high-quality customer delivery. So how do you usually access the supply of agents is basically?
So actually, the supply of agents is the straightforward piece of the jigsaw for us, and it contrasts quite sharply with my experience in my previous role. So in my previous role, we spent a huge amount of time and energy recruiting agents, and we always struggled because we were recruiting into a centre, which meant that we had geographical restrictions. We could only recruit from a 20-mile radius for those agents. I think there's a stigma associated with working in a call centre as well, and so we would get a certain type of person join, and they were typically 18 to 21-year-olds who are quite flighty and limited work experience. So constant churn of agents there, and it's typical in a traditional call center environment to see that. Actually, I was really surprised when I joined Odondo that we're able to attract very straightforwardly some really great agents, and a lot of those agents have been with us for a long time. The average age of the Odondo agent is probably about 10 years older than a typical call center agent, so they're probably in their late 20s, early 30s, and they come with work experience, a range of work experiences, and are certainly much less flighty. And because we're able to recruit across the country, it means that we've got access to a greater pool of people, and all that sort of lends itself to that delivering that high quality agent experience, because we have our pick of people. There's a huge demand for people to do this kind of work. People really do value the ability to work from home and to choose their hours and the flexibility that goes with it.
Thanks. Would you be able to highlight the difference between you guys and, let's say, the large outsourcers?
Yeah, I mean, the classic difference is that they have this very fixed, rigid model. So when you're working with a larger client, the demands that they place on the client are quite specific and are quite rigid. One of the big benefits that we deliver to clients is that flexibility, the ability to scale up and down depending on demand. So that demand can flex during the day, it can flex during the week, it can flex across the year if there's seasonality in that business. And clients really like that flexibility. And as Bobby said, we're really going to double down on that by attracting SME businesses who may be really quite wary about outsourcing and who may never have outsourced something before, and so will be naturally wanting to be a bit cautious about the restrictions that are imposed on them. So actually we find that that's a really big differentiator. The other big differentiator is, as Bobby said, we're able to curate an agent experience for clients. So a traditional outsourcer will have a fixed pool of resources that they need to sweat regardless of fit. But what we're able to do is we're able to find agents that are appropriate for a given client use case.
Yeah, it's probably what's worth adding to that. in practice, how we can scale so rapidly for clients is, again, a function of our model. So the fact we have a gig economy agent not sitting on the books as a fixed cost means we can actually over-resource a project in the early days. So, for example, if a client comes to us with a 10 FTE requirement from Monday to Friday, 9 to 5 p.m., what we'll do is we'll resource that with 20 agents, and we'll split the 10 FTEs worth of hours across that larger cohort. That does a couple of things. One, it builds in resilience in the instance of illness or absenteeism of any kind. But secondly, if overnight, through surges of demand on the client side, that 10 FTE requirement becomes a 15 FTE requirement, we just dial up the number of hours that each agent does. So we don't need to go out and scramble for more people, try and retrain them. We have this flexible, pulsating resource there that can just step into the breach.
Interesting. So it's the flexibility, it's the curating around client needs, and basically your asset light at the end of the day, which means that it actually gives you higher margins as a business. You mentioned that going for the self-service box. Basically, it's, in short, for those who don't know, it's providing tools and agents to SMEs. So how is this? Why do you think there's an untapped market, and how do you think this is going to drive growth going forward?
So that's shaped by our experience today. So we have a number of large clients, but we also do have quite a good number of SME clients on our books, and it's obvious from working with them that they want these things. So they come to us and talk to us about some of the tools that they need to support their customer service function. So we know that there's a market for this, and the vision for it is not only to be the guys that provide that agent resource for them, but actually the tools to manage that resource and manage the function in its entirety. So along with those resources, we'll provide them with the tools that allow them to schedule those agents, that allows them to recruit the appropriate agents, that pays the agents, that manages their performance, and also by providing tools like, if they need a dialer, we can provision that for them. If they need a ticketing system to manage work, we can provide that. Suddenly that becomes a complete customer service function, and it becomes very, very sticky. It means that for clients who want to leave, they have to unpick all of those relationships and rebuild them again. And that suddenly becomes really quite inconvenient. It also starts to change the dynamics of the commercial model as well. So rather than just being that variable charge, which is based on the number of agents that they use, there will start to become license fees in there as well as they use the platform and the various options within the platform. So the commercials start to change for the proposition as well. It's something that we're really, really excited about, and we've already started to build. But as Bobby said, key source of funds is to build that out.
And I guess that's supporting your strategy of increasing revenue per agent and clients from 2 to 14 going forward.
Absolutely, yeah. There's a huge untapped market segment that we can attract through that proposition, it's relatively straightforward, we feel, to do that. The other driver of that number is an increase in the sales activity that we do. So we're really pleased with the performance we've had to date, and we've managed to do that on a shoestring with very limited sales resource. One of the key uses of funds is to increase the resource that we have in that side of the business. And it follows that we will see more clients off the back of that.
Thanks. We have another question, which is if you can share any metrics on customer retention or churn.
Yeah, I think we've actually very, very low churn, and that is a function of our focus on customer service. So it's worth maybe giving you a bit of background. When we first launched the business a couple of years ago, we tested a number of different use cases. So alongside customer service, we tested sales or sales support, things at the top end of the sales funnel, like lead generation, lead qualification, appointment setting, etc. What we found with those types of campaigns, was that they were just that. There were campaigns in a very real sense. They had a beginning, a middle, and an end. They tended to be a campaign around an event or a piece of marketing or an initiative. As a result, the revenue was quite lumpy, and clients churned relatively regularly. Whereas on our customer service work, we saw actually this is really durable revenue stream, because if think of an e-commerce business and you've got a customer service need in month 1, you've got it in month 2, 3, 4, 24, 36. So actually you become embedded in the fabric of their service and their proposition, and these relationships tend to endure. So we've actually seen low churn over the past sort of 12 to 18 months. Clients that do churn are generally smaller clients who decide outsourcing isn't for them, or just see it such a fall off in volumes that actually it's not worthwhile. But we rarely, if ever, lose a client due to service quality. And in fact, a good source of business for us over the relative limited time we've been in business has actually been client referrals. So we've had sort of 3 or 4 large clients actually come through referrals from other clients.
Thanks. I think you touched on it before, and that's, I guess, the nature of your business and the quality. I mean, customer service can be forecastable and very, it's a sticky business, generally speaking. So I think that also supports the low churn, and besides, of course, your referrals and the quality of the work done. But generally speaking, I guess it's because of the nature of the industry, delivering high quality customer service as well. I mean, that could be also a reason, in that it's forecastable and it's there to stay, basically. I have another question which relates to you guys going into the Middle East, and if that's an attractive market for you, and why is so?
It is an attractive market. There's several reasons for it. I mean, one is that there's a highly educated local workforce that we can tap into. The other really quite compelling reason for us is that we have some really good contacts in the Middle East, and one of the guys from Hamburg Perks that sits on our board is from the Middle East and has fantastic connections in the Middle East. So we're really confident through the exploratory conversations that we've had with him and with some people on the ground that there's definitely something that we want to be doing sooner rather than later in the Middle East.
Yeah, we also have we have some Middle Eastern investors as well, actually, some shareholders who are quite high profile in the Middle East and could certainly help us with early business development on the ground. Yeah, we've actually spent some time talking to lawyers, just in terms of validating the proposition in the Middle East, because there are always nuances around local employment law. But it appears there is no icebergs on the horizon in that sense.
Yeah, sure. And in terms of the resources, I mean, market, in terms of, you mentioned there's like good quality of educated people and people who actually want to work from home, like women, for instance. So it could really be a nice fit for, and a natural market to expand to, in terms of getting a larger pool of resources. And also because you're positioning your product as a global, you're a global company, so you can deliver customer service in various languages, including Arabic as well, down the line.
Yeah, absolutely.
Yeah, sure. I mean, there was a question which relates to how do you ensure the quality of the resources that you hire in terms of like the agents, but I guess you brushed on that. I'm not sure if you want to talk about it again.
Yeah, I mean, just very quickly on that. So we have access to a larger pool of agents. So we have our pick of agents. We select the appropriate agent in the first place, the agents that fit best. So we're not trying to sort of shoehorn resources in. As Bobby said, we overstaff, certainly at the start of a campaign, we overstaff an engagement, and it allows us to, very quickly weed out the poorer performing agents, if there are any. And the managed service is just that. We have people within the business that oversee the performance of agents. So we have team leaders who review and drive performance in agents, and we have account managers who face off to clients. So, very much what you would get from a traditional outsourcer, but reimagined in a virtual way. So those are the things that we do to maintain quality above and beyond what a traditional outsourcer is able to do.
And then down the line as well, with the self-service box, the clients would have a performance management tool. Exactly that. So rather than relying on us to tell them what's going on, they actually have exposure to that themselves. They can monitor performance. Okay, great. Yeah. Well, thanks a lot for joining us again tonight. We wish you the best of luck. And for any questions, please drop us a line again to the panelists, else investors@eureeca.com, or myself as usual. Thank you. So we'll move on to Fitch Technologies. Hi, Samson. Thanks for joining us again tonight.
Thank you. I'll just share my screen a second.
Sure.
All right, thank you, everyone. Imagine you're an SME today. You want to start a business locally in Dubai or across the region. Obviously, you're going to need technology support for your business, either to build a website or mobile app if it's a service or an app, or just technology to optimize your internal processes. Typically here, you're faced with three options. You can get any of the local agencies to give you a quote and do the work for you. Second, you can hire an in-house team, or third case, you could approach freelancers to handle different aspects of your technology requirements. Now, the first two options are typically cost prohibitive locally. Agencies locally are very expensive, and most SMEs cannot afford them. Hiring an in-house team as well, with the current situation, is very expensive. You probably need a couple of tech engineers with different proficiencies to have a comprehensive tech solution for your business. So most SMEs end up going with the third option. They work with freelancers. Now, the challenge with freelancers is that it's very difficult to find one freelancer that has a full breadth of solution to support your business. So oftentimes, businesses start with freelancers, and then midway, they're disappointed and they come to us. And that's where we come in. Time and again, we've seen the same narrative happen with some of the SMEs we've worked with. They're frustrated with working with individual freelancers, or they cannot afford to work with the big agencies locally. And that's where we come in. We provide scalable and measurable digital solutions and ad tech solutions to help SMEs scale digitally. Typically, our offering starts with either a request to build a website or a mobile app, or even custom solutions for business process optimization. And for us as a business, we start with this, and then we try to upsell the clients. Once we launch a website or an app, we upsell to offer digital marketing solutions, which could be ad campaigns, or in the case of mobile apps, programmatic ads, where we're able to get customer acquisition via download and in-app option for the apps. And also, we provide all the admin around the apps or website we build for clients. In terms of our business model, we operate a leveraged workforce model. And this means that we have a small core team of engineers, and then we have a leveraged pool of over 250 admin to support the delivery of services we offer to our clients. How do we do this? We have a franchise agreement with an outsourced organization in the UK, and this pool gives us access to over 250 admin to manage the non-core activities of our operation. What this does for us is that we're able to deliver to a broad base of clients without the incremental cost of having a big team in-house. In terms of technology, obviously, technologies are the core of what we do. We have a strong proficient team in-house. However, we don't intend or plan to do everything for everyone. So we focus on what we do well, and we stay learning on technology. As you know, if you're at all familiar with this space, technology gets obsolete by the day. So we're partnered with regional and global tech partners as well to support us in case of technologies that we're not very proficient in, and we don't want to be spending time on what we're not very good at. For marketing, as a digital agency, obviously, we get very creative the way we run our digital campaigns. So we're able to onboard clients through digital campaigns, as well as from referrals from either clients we've worked with before or just from word of mouth. And remember, this business started as something as a hobby, and eventually 2 years ago, we set up shop and it became a business because we had enough traction and a proven business model with paying clients to show that it is sustainable. For our revenue model, there are two principal ways we bill clients. We have a project-based pricing model, as well as recurring revenue from maintenance of websites, for example, or from digital campaigns for clients. And what this does for us is that we have a fairly long lifetime value for customers once they get on board with any of our solutions. We've been in the market for about 2 years plus, and we have clients who have been with us from the start, and they're still with us today. Our core team is very lean, like I mentioned earlier. It's myself as the founder, and Nidin is our Chief Technology Officer. He's been in the region for over 11 years, a tech entrepreneur himself. He drives the development of the technological solutions we provide across board, and also ensure that we deliver on time and on budget. Ivana comes with over a decade experience in international development, and she helps ensure that we standardize our processes as we scale the business, and also ensure we deliver on our customer promise. Nick is a chartered financial analyst. He's worked ex-PwC, and he helps to see that we operate financially in a very prudent manner. He drives the investment decisions we make and ensure that as we scale the business, we're able to maintain our books in a healthy manner. In terms of the market we operate in, we started here 2 years ago, but today we have clients across the Middle East. We have clients in the UK and even in the US. As a digital solution provider, we're able to deliver solutions to clients both locally, regionally, and globally. We have in the market quite some competition, as some of you might be aware. There's some big agencies, there's some medium-sized ones, and then there's some fragmented agencies, small ones across the board. In the 2 years we've been in the market, we've been able to establish some dominance, not just for the SME sector, but we've also worked with some big names in the market. And you can see here from some of the testimonials we've gotten from clients. Last year, during the pandemic, Danube approached us with a brief, and we were able in a short time to turn around on 5 product lines and generate over 300% return on the campaigns we ran for them. And they issued this recommendation letter to us in recognition of the work we did for them. There's also a local concern in Abu Dhabi, ZNA, family-owned business, very traditional. We came on board with them almost 2 years ago, and we completely transformed what they did in-house with technological tools. And the work we did actually helped them secure a government contract in Abu Dhabi for over $5 million. And in recognition for that, they issued this appreciation letter to us. In terms of valuation, in this space we work in, we explored the different models which are typically used for valuation, and we settled on the DCF model because it created the most value for our shareholder, and also it combines both our historical financial performance with the forecast over the next 3 to 5 years. And based on this, we came to a valuation of $4.1 million. Now our ask. So we're looking to raise a minimum of $200,000 for 5% equity in our business. We are deliberately staying low. We don't want to be heavily leveraged because we believe there's still a huge upside in our business. The reason why we've gone to this campaign is that we want to build our core in-house team. Now, because we work a lot with SMEs, it places us in a unique position to actually experience firsthand some of the pain points that they occur in the business. And through studying this and the R&D we've done over the past 2 years, we're actually working on 2 products targeted for specific sectors in the SME space. And to build these products, we want to build up our in-house team to ensure that, because the technology we're going to use is proprietary, we're building it in-house, and this will help us to build up a team to deliver these products. We also want to invest a bit in marketing. So over the past 2 years, we've grown organically, very limited marketing, pretty much word of mouth. We've tested our model, it works, and we're profitable. Even in 2020, with all the challenges that businesses faced globally, we turned a profit in 2020, and that was our first year of operation. So we feel like we have a model that is already tested in the most challenging times, and now we see significant upside, and we want to invest in marketing to help us scale and achieve the upside we anticipate. Obviously, we want to also allocate some funds to operational admin as the business grows. In terms of exit, typically, we believe it will be a target of acquisition in the space. We've seen it happen time and again with several agencies in the space. Recently, in the UK in April, Shopper Media Agency, which is quite a young agency, was acquired by Next 15 Communications for £15 million plus. And even locally here in Dubai, Socialized Agency, which was just founded by a young lady here in Dubai, was also acquired by a global giant, Wheel Social. So based on what we're doing today and the traction we anticipate, we believe that in the next 3 to 5 years, will be a target for acquisition, and that will be our ideal exit. Why invest in Fitch Technologies? We are a young player in a big industry. It's over $290 billion, and that is just for the web development part of the business. If we're talking about the mobile app and custom solution, it's much more than that. And interestingly, the Middle East region and Africa are forecasted to be the fastest growing regions in the space. So we're not only in the right business, we're in the right market for this business. Well, as far as we know, we're the only software agency in Dubai that operates the model we have today, which is a lean in-house team and a leveraged outsourced team to support the work we do. Now, what this does for us, like I explained earlier, is that we're able to serve a broad base of clients without having an incremental cost that comes with having a huge overhead cost. And this is partly why we were able to stay profitable in 2020 with all the challenges that businesses experience globally. Also, it's a very high margin and scalable business. Today, we're serving clients in countries that none of our team members have been to, and that's because we're in the digital space. We're able to engage with clients remotely and deliver first-class solutions for them across the world. And finally, something we're very much excited about, like I said, we are in a unique space where we work closely with business owners every day and we experience their pain points. So about 1.5 years ago, we started actually to actively conduct an R&D to understand these sectors and what we can do further to optimize the business. So that R&D has led us to 2 products, which are currently, one of them actually we're going to be launching in first. We're going to start development in the first quarter of next year and hopefully launch by second quarter of next year. And it's a software product based on a subscription model for a specific sector in the SME space. So with this product in the pipeline, we feel very confident that in addition to what we do already, it presents us with significant opportunity for upside in the business. Finally, to wrap up, I'd like to share a success story for a project we won recently. About 1.5 months ago, we were appointed as a technology partner for the Côte d'Ivoire Pavilion at Expo 2020. So this means that we built their website, we're running all the social media and all the campaigns they run currently, and we live stream all the events they conduct both at the Expo and at other arenas. If you were paying attention to the media, you would have seen that last week the Prime Minister of Côte d'Ivoire was in UAE for a business forum and also for the National Day of Côte d'Ivoire at the Expo. So the event, both for the business forum and the National Day, was live streamed by Fitch Technologies. So these are some of the wins we're seeing in the market, and we expect more of that to come as we grow the business. And like I said, we're excited about the product we're planning to launch early next year. I'll be happy to take more questions now if you have them.
Thanks, Samson. You mentioned you guys were developing proprietary technology. What's the update in that regard?
Yes, actually, it's something we're very excited about. I've highlighted a few of the sectors. We're obviously keeping some of the information on the wraps for now, but what we've done is from the experience working with SMEs, either to build their website or mobile apps or even to run campaigns for them, we started seeing a pattern. We started seeing for specific industries the same problems and the same challenges faced by the business owners. So what we've done is to actually create a concept. It's an AI-powered solution which is targeted for a specific sector. And what it's going to do is to take away the pain of the business owners and let them focus on what they do best. So if you run a salon, for example, focus on the beauty products you deliver to your customers. And we use our technology to optimize and enhance that service. It's going to be a subscription-based service, and we finished R&D for one of the products. By Q1 next year, we're going to start development and we're going to launch a beta version by Q2. So that's something that, because of the unique position we're in, we're able to get first-hand information from business owners, and that feeds into our R&D for future launches. So as of now, we have one proprietary product we're going to start now, and a second one still under R&D.
Interesting. And would you look to patent these down the line?
Sorry, can you say that again?
Would they be? Would you have to? Would you patent these? Would they be? Would you get a patent around them?
That's actually a very interesting question. To be quite frank, when it comes to patents, it wasn't something that we were very, especially in tech patents. So we've spoken to a lawyer locally and also through our network, a lawyer in the US. So in the US, for example, IT products and tech product patents was pretty well defined. Here, it looks like it's still evolving, though we were advised that, yes, it can be done. So what we're looking now is to make sure that the algorithms and the code you're writing are proprietary from A to Z, because this is one of the criteria to be able to be eligible for a patent. So that's something that we're still taking advice on, and definitely we want to pursue to protect the IP for the product.
Yeah, interesting. And in terms of when it comes to, because you mentioned your main, you help clients around web design and also app development. So when it comes to app development, you basically charge your clients. Is it per download or is it per customer acquisition? If you can just allude to that, so potential investors can understand more your business model.
Sure, that's a good question. So for app campaigns, we typically run programmatic ads. It's a bit different from the traditional digital campaigns, and we actually partner with several DSP and supply side platforms where we have access to a huge inventory of apps where we can run campaigns. And typically we build on the CPI model, which is cost per install. So what it does is it gives full transparency to the customer, and it also guarantees our revenue because we get paid per install. There is no blurred lines in terms of the outcome of the campaign, so it's purely performance driven. And because we have access to a diverse pool of inventory, we're able to accomplish the target for the client. So to give you a real life example, one of the local conglomerates here, we ran a campaign for their money exchange app. They had a specific target of downloads they wanted to accomplish per month, and we got the brief, we executed, and we achieved that, and we're able to get paid per install because it was very transparent. They wanted a certain number of downloads, and we delivered that. So that's a model that works both for the client and for us as a business.
Thanks. I mean, in your opinion, do you see a growing trend for companies to outsource the marketing function going forward?
Yeah, definitely, because if you look at what has happened over the past 1.5 years, and particularly accelerated with the pandemic, your competition is no longer just local. Your competition is global, because now we've realized that actually most products and services can be delivered remotely. Now, what that does to a business is that your upside is limited. So to protect your margin, you have to depend on optimizing in-house. And how do you achieve that? By outsourcing. Unless you're a large company where you can afford to have an in-house tech team, or you have a big budget to outsource to an agency, you pretty much need a company like us to provide support with technology products, with digital marketing. And that's why lately we see a lot of traction in this space. And that's something that we're very excited about.
Thanks. And then moving into another question, if you can let us know about, where do you go from here as your growth strategy? And how do you see, you mentioned going forward, you see yourself as a target for an international player to acquire you. Why do you think that's the point versus them expanding in the region?
Yeah, so if I take the local case as an example, why would an agency as big as We Are Social acquire a local agency? Now they have the resources to set up shop and start from the scratch. However, the local agency in this case specialized, have a unique insight of having worked with customers locally, built a network locally. So that's an asset that you cannot purchase. And that's the same experience we're going through now. We've worked with SMEs across different sectors of the industry locally, and we get unique insight of data from that, which we believe, unless you're in the market and spend that breadth of time in the market, you cannot acquire. So as we grow the business, any regional or global player that wants to access the market for sure would look at companies with local know-how and local reach to get on board to scale their business. So that's why we feel that as a business, it would potentially be an exit that will happen. We see that all the time globally, locally here in UAE, the UK, and the US, with similar companies in our space. That's pretty much a standard practice in the space.
Thanks. And then as we know, that you guys have acquired a franchise in the UK for, there were 250 people. Do you think that's the strategy going forward also in terms of scaling and growing in different markets, is to acquire specialized agencies, or just like the UK franchise you acquired, I guess, a few years back, or last year, was it?
It was 2019, actually.
Yeah, so do you see this as a strategy going forward? Is this part of your growth strategy, is acquiring other marketing houses specifically in terms of helping you scale?
So we plan to stay a lean organization, and that actually helped us a lot last year because no one anticipated what we saw last year. But because we're a very lean core team, we were able to control our costs. So our strategy is to keep a strong core team. We still keep all our proprietary development in-house, but we support functions like running campaigns and the admins around it. We're able to provide it via this large pool of remote assistants we have. So that's something that we will continue to do. To give an example, with the franchise we have today, we're able to use this admin to deliver for clients in the UK, in the US, across the region, in Africa. So that's something that gives us a wide reach in terms of capacity to deliver to clients. However, we still plan to maintain a strong core team for proprietary development.
Thanks. Can you just touch on the financials? They can definitely see the deck, but if you can comment on the EBITDA and forward-looking EBITDA going, yeah. I would just like to tell this investor that you guys have been profitable since last year, is it?
Absolutely. So that's something that is not very common for most startups. And
yes.
In our first year, we were only a few months old, and then 2020 happened. Everyone panicked, decisions were not getting made. But again, we were in a digital space, and actually, the situation helped us pivot because a lot of business depended solely on digital space to grow. The example I gave earlier with the Danone Group, they have large retail spaces all over the region, but obviously with the lockdown, they had to invest more in digital sales to grow their business, and that's how they got us on board. So that's something that even now that we're slowly coming out of the pandemic, most businesses, it's become a crucial element in any business. You have to have a digital strategy. Otherwise, you cannot survive, because whether you're a local business or international business, your competition is no longer local. You can own a business in Dubai and have someone in London take business from you from the digital space. So we see that what we offer today, it's needed across board, and we're able to stay profitable last year because of that. And we intend to keep leveraging that and keep a lean core team. So I would say it's a combination of two factors. Our model, which is having a very lean core team, and also the space we play in, which is the digital space, where we have the breadth to scale exponentially without having the incremental cost that would come from scaling.
Okay, thanks a lot. I guess this was the last question. Again, I mean, and congratulations for being appointed for a digital partner in the Expo for, as you mentioned. And of course, it's great news that you guys are still profitable, which you mentioned it's unlikely for startups. And thank you everybody for listening to Fitch Tech. If you guys want to invest, you can click on the link in the chat box or on the platform itself. And we will move on to Shugah. Thanks again, Samson.
Hey guys, can you hear us?
Yes, of course.
Perfect. Right, cool. So we're just gonna put on the presentation.
Yeah.
So. All right, tell us when you can see.
Yes, we can. Thanks.
All right, cool. So let's get started. So first of all, thanks for everyone who's joining in. My name is Abhishek. This is Farhan. We're the founders of Shugah. We're here to tell you a little bit of our one-stop celebration shop. But before we begin, we thought we wanted to highlight the importance of celebrations and why we believe that everyone should celebrate life. Okay, next slide. You live life only once, and every special moment in life deserves to be celebrated with the people we love. Celebrating occasions brings us together and enhances the quality of our life. But planning celebrations can be stressful, whether you're getting a gift or throwing a party. Questions such as, what would be the perfect gift for him if you have a budget, and how will I make time to go to different places to get flowers, cakes, balloons, which would make planning celebrations an absolute headache. Hence, the big opportunity here where Shugah steps in is by becoming your one-stop celebration shop. We allow you to order all kinds of gifts and event-related services for parties and have everything delivered to you anywhere, all over the country.
Now, there are 5 key components of Shugah, starting from becoming a celebration superstore. See, here at Shugah, we invented celebration tech. While the journey started with sweets and cakes, we added flowers, party favors, gifts, and other event services to provide a wholesome celebration solution. So our platform treats balloons, party store items as burger joints do their fries and shakes. They're inseparable when you want to have a good time. So we do that by being a curated marketplace. So we provide celebrations that are stress-free. Our goal is to make the process easy by streamlining the flow, personal by allowing you to customize, and fun, because after all, planning a celebration should be exciting. So here's how we curate the customer journey through 4 stages, which differentiates us from the usual e-commerce shops. We help you choose the gifts in mind directly or by giving you ideas of what your party could look like, after which you can pick the product and services that fit your plans best. These can then be customized based on requirements such as the number of guests at your party. Finally, you can check out based on the date required, whether it be for today or even 3 months from now, so you don't forget your wife's birthday. The 3 C's that define our approach to celebrations are choice, customization, and convenience. Now, how we do that is by automating the process to make a seamless flow. Once you're ready to check out on your app, the vendors receive the order on their vendor portal and can choose to accept it. Subsequently, it then gets assigned to the allocated delivery driver on their route planning app, while you have the ability to track the status from pickup to drop off. So you know the right time to shout, "Surprise!" Now, this is how we make sure everything is delivered just right. First and foremost, our delivery is suitable for transporting items of all sizes, including sensitive goods like cakes. Now, 75% of the orders that are incoming are assigned to our dedicated delivery fleet, while the remainder is assigned to our delivery partners. This allows us to tackle high and low seasons, as well as cater to popular hours in the day. And this model allows us to minimize unnecessary expenditure and provide backup solutions in case of emergencies. So hang in there. We'll make sure that your gift gets there on time. Finally, we have other smart features as well. Now, we're more than just a delivery platform, and we look to go beyond being just an e-commerce store. So our main USPs include your own built-in personalized calendar to store all of your occasions and celebrations, whether it's for your friends' birthdays or your parents' anniversary, to ensure you never forget by sending you reminders. We also allow you to customize the products and services the way you want. Finally, we also give you free party planning tools, discovery features, and to build loyalty, gift reward points.
Now, when understanding the market, it's important to look at the market size of cultural and religious occasions. And we all know UAE is an absolute melting pot of people from all over the world. That means in UAE, we celebrate occasions such as Eid, Halloween, Mother's Day, Diwali, Christmas, everything, which are all very large markets on their own. However, it's equally, if not more important, to assess the market size of personal occasions as well. 70% of people in UAE are married, and the average household here has roughly 5.3 members, which has an average of 3 children per family. Per person, that's around 5 to 10 occasions which they would celebrate, whether it's their friends, family, birthdays, as you like name it. Next slide, please. But it's not just the customers that benefit, it's also the vendors, as we address key issues not met by other marketplaces, such as listing products that cannot appear on food apps due to preparation time, customizable features, which is our USP, or future scheduled orders, delivering products that are usually too sensitive to be transported by bikes, and providing access to an audience for gifting and parties. Our revenue model consists of 4 revenue streams. The app order revenue is the backbone of our company. It's based on the commission from every transaction from vendors. Next one is the gross retail revenue, which we earn by selling our own party stock in addition to the products picked by customers. And this is where we make our highest margins. Then comes the delivery revenue to cover the costs. And finally, ad revenue, which we look to add in the future, where we will look to charge vendors for promos, offers, also to just be featured on the platform itself once we have over 100,000 users. Now, ladies and gentlemen, here is the team. Arham, who handles our tech and development, Farhan, who handles the strategy and operations, and myself, who looks over the vendors and business development side. Now, we may not have any competition per se as far as a complete marketplace, but we do face competition from the following companies on the different segments of the market. For example, giftbag.ae and Joy Gifts for the gifting segment, Flower.ae and Flowered compete in the flower segment, while Party Center would be in the party segment. Now, we believe any marketplace should be judged by who has the highest delivery convenience, as well as product variety. And here at Shugah, we cater to both. It's also important to note that there is no large global player who dominates the market share in the celebrations industry. Now, after our recent global pandemic, majority of the people have resorted to online shopping, which has gone through the roof, whether it be groceries, retail, anything. As you name it, it's gone through the roof. And due to the expo, there is an even higher amount of people and revenue in the country currently. However, I would particularly like to highlight there's been a 350% increase in number of gifts purchased online, 80% increase in the searches for gifts, and 50% increase in last-minute shopping for gifts.
See, the idea was born in 2018 and the development in 2019. But now in 2021, we have over 120,000 visitors and 50,000 downloads. We have 3,000 products from over 50 vendors within 100 categories. And we've also expanded from Dubai to all over UAE in less than 2 years. We have achieved a total revenue of $150,000 since 2019 till date, including 200% growth in the last 12 months. Finally, we have also been incubated by In5 Tech from the Dubai Development Authority and received our first pre-seed round of investment from Abu Dhabi-based company Xseed. But this is only the beginning of our journey. From here, Shugah for Work will pioneer staff birthday plans and corporate gifting and events. We look to sign on home bakers through commercial kitchens. We also look to use AI to enhance the experience by catering to each user's preferences. And finally, we are collaborating with international gift providers so that our presence is all over the globe. The investment that we require for our growth plans is $250,000, which will mainly be allocated towards marketing, especially digital ads, while the remainder would be utilized towards increasing our delivery fleet, as well as on-site and off-site support team. We also look to enhance our features and expand to other territories, starting from Middle East and Asia. Now, why invest and what's the exit plan? See, the profit projections we're looking at is break-even point by 2023 and net profit of 6 to 8% by 2025. While this forecast is based on just the $250,000 cash injection, the company would look to raise further investment to expand growth and capture the market. Now that we know that gift and event online market is growing rapidly, our objective is to become market leaders through our curated marketplace approach. We expect an exit plan between 2025 to 2027, where we believe that a larger e-commerce or delivery player would want to absorb the market that we have captured in the celebrations industry for 10 to 20x our current valuation. We only hope that you would be able to join us in this journey. Thank you very much for your time, and that's all from our side, but we'd love to hear some questions. Hope you have a sweet day.
Thank you.
Thank you, guys. So what's the growth strategy from here? What's next for you guys?
Yeah, sure. So basically, as mentioned earlier, we're trying to open different facets of the company. And that includes the Shugah for Work feature, where we get into the corporate segment as well and try to tackle into the regular staff birthdays and the corporate gifting. And we use free party planning tools as well. So we're using e-cards, e-invites and such by giving people the ability to plan their own celebrations, by adding home bakers and AI-based experience as well, and getting into the consultancy of bakeries as well. So we have various horizontal growths, but also when it comes to vertical growth, we are also aiming to pool majority of the funds into marketing. You see, we already have established the development. Yes, we want to enhance some features and we want to add some more staff, but majority of the funds are going towards marketing, because what we're trying to do is get into the UAE market, dominate the UAE market for the celebration industry, because there is a market gap for that. And then look to grow from that to other territories, starting from Middle East and Asia.
You mentioned that at this point you have mainly, in terms of competitive landscape, that it's primarily segregated competition, and I see that. I mean, if people want to go buy flowers or gifts, they go to specialized platforms. But how easy it is, from a customer acquisition point of view, that because these people, like the platforms already have a loyal customer base as well, like Gift Bag, Joya Gift. How easy it is for you guys to acquire customers, or for these to think, okay, no, I'd rather go to Shugah versus the usual flowered gift bag versus how easy is it for you to acquire new customers when you have segregated? It is segregated indeed, but there's strong loyalty, I guess, within each. So how do you go around that?
So first and foremost, I would like to highlight that these guys are mainly local players. You go into Pakistan or India, or you look into in the Asian territories, or you look within the Middle Eastern territories as well. You only have players who have maybe spawned on the local market, or maybe expanded to 1 or 2 or 3 countries at most within a specific region. So what's important to know is that there's no global dominant player in the market, right? So that's first and foremost. I'd like to highlight to say that there's no one who actually captured the market, and it's still up for grabs.
Yeah, within the UAE. So, I mean, why would I go to Shugah versus if I usually buy, let's say, flowers from a certain, how would you acquire? I mean, locally within the UAE, for instance?
Okay, so first is now, so what we'll talk about is first is our curated marketplace. And when you talk about the curated marketplace, what you realize is marketplaces are changing nowadays. Something like Amazon, which is out there, is sort of tackling various amount of categories, and most of these e-commerce shops have pretty much replicated that. They're a simple e-commerce website, plain and simple e-commerce companies, and they don't walk you through the experience. And as we mentioned earlier, when you're trying to plan a celebration, it's not always the case that you know what you want, right? You want to be able to curate that marketplace. And so that's where we come in. We try to curate the marketplace through the various stages that we have to streamline that process. So we know that, okay, are you looking for a cake, or are you looking for an idea for a party? Okay, maybe it can be this kind of theme. Oh, are you looking for something ready-made? Is it for 20 people, 30 people? So we walk you through that process. But I'd also want to go to and maybe talk a little bit about our smart features, which kind of differentiate us. So you see, most, as mentioned earlier, most of these guys are e-commerce shops. So what we're bringing in is creating a habit and going towards a target market by putting in things like the calendar integration, which allows people to integrate their personal occasion and remind them of it, right? So let's say you place an order and it was for a birthday, for your daughter's birthday. So it should be the case that next year I'd be able to remind you. But not just be able to remind you, but allow you to send e-cards or e-invites, or if you're doing a party, then wish lists, get RSVPs. So we're building these party planning tools as well into there. And again, there's a lot of times people want something very particular. So we have an option, let's say, called Customize Your Cake, where you upload your cake option and fill in a questionnaire, after which we automate codes from a partner bakeries. So we have various bakeries who can do customized cakes, and we pull out codes from them. Mm-hmm. And then after there, we also have discovery features like popular tags and subcategories, so you can help guide you towards finding the right product for you, which we want to eventually use AI to sort of improve gifting recommendations. And one thing we want to loop people in through is using the reward point system. So like every time you place an order to Shugah, or every time you recommend to others, you accumulate reward points. And what we're trying to do is encourage customer loyalty with that. So I think these are some of the features which differentiates us from your brick and mortar e-commerce shops.
Sure. I mean, so basically, versus the online shops and the ones that specialize in gifts, because we were talking about segregated marketing, the main point is that you guys curate, you're able to curate events, and more specifically, you want to actually be proactive in terms of how people view events, because as you mentioned, the UAE is a great market for you to be here, given the diversity in terms of religion and cultures. But the personalized calendar, this is something that's very interesting, because I feel down the line it could actually build a customer base on a proactive manner, especially if you can curate events. And sometimes people don't think about what they want to, it wouldn't occur to them. But then when you show them that, maybe it's different. Are you implementing any AI within your technology in terms of within the app down the line, or would you look into developing anything that's proprietary?
Yeah, so what we've done is right now we've we've collected a lot of information in regards to where people are clicking. You know, are people going based on category system? Are people going based on vendors? Are people going based on themes? What we're trying to do is, so we've already implemented one thing is order again, which kind of replicates or remembers your last few orders as well. So using those data, we're now in the stage of experimenting with various AI tools, which we are integrating into the system. And basically what we want to be able to do is, you know, understand your preferences, but also be able to guide you on what kind of gifting recommendation. So let's say you are ordering for a girl versus a man versus a husband versus a daughter versus a friend. What kind of gifting recommendation should kind of pop up? And by understanding that data and then being able to systematically be able to you know, implement that for any future orders. That's what we're in the process of doing at the moment.
Yeah, interesting. And then basically it won't be reactive. People will just come to you when there's an event. It would be like it would prompt them to actually celebrate more events perhaps, and you know, think of you as a one-stop shop at the end of the day.
Yeah.
What about your growth into other GCC markets and the exit strategy?
Okay, sure. So I think, see, when we were doing, when we were even collating data here, what we understood was due to the culture, it seems to be that Middle Eastern and Asian people usually have more frequency in orders, and that's because they have more celebrations. So, you know, whether it be uncles, sisters, brothers, they live in extended families. So they have more people to celebrate with. So it only makes logical sense for us to continue within the Middle East and the Asian market. Now, within the Middle East, Saudi is the biggest market. I think we all know that. And in terms of Asia, you know, India and Pakistan is a good option, especially since we're trying to bring in international sellers. So a lot of expat Indian Pakistanis who are sitting here, yes, they can order for their friends and family here, but a lot of them are income providers and they want to send something back for their family back there. So we've actually opened that. We're in the process of opening that option up, and then collating data and kind of getting into that market. So we're not just doing it blindly. We're going at a systematic way. But I think first and foremost, if we are able to capture enough of the market, particularly in this celebration market that we call it, I think there would be a larger e-commerce player or a delivery player, which would want to get access to the market, which we have kind of, which we've kind of obtained. And that's where an exit strategy would come into play, where they say, yes, you know, these guys have all the features, they have all these personalized features, they've already captured a significant market. Let's go and eat them up. Just like how you had Delivery Heroes identify InstaShop as a company that picked out the grocery market and then it's come in and ate them up. So similar to that, I think that's what we are aiming for as well.
Okay. So, but you have not taken any steps towards entering Saudi or other GCC markets at this stage. It's just delivery.
As mentioned, we have already started opening orders. We're in the process of opening orders in Saudi, as well as Egypt, Lebanon, Syria, and India and Pakistan, because that's where we realize most of the expats living here are. By doing that, we open the option up there as well. See, the best thing about the platform is to open in a new region, we need to get vendors, which are, you know, gift providers, bakeries, etc. And we need to get delivery partners who know the area well. And by collaborating with the two, we can open up. So while we've started based on our own budget and the initial pre-seed budget that we received, we already started international gift providing from here, but I think we can only expand further once we have been able to raise the funds that we're looking to raise.
Yeah, sure. And is your model more based on is it service or product oriented, would you say?
At the moment, yeah. So at the moment, it is product oriented. We're in the sense where we've allowed various customization abilities within the product. So let's say you add a cake, you want to have different sizes, you want to have different flavors, you want to have different, you want to write a happy birthday message on it. But to be honest, the same is being replicated into the services bit as well, because even if you are, let's say, getting a service, could be like entertainment. You know, you're getting a popcorn stand, or you're hiring a DJ, for example. The DJ has various hours that they work, and et cetera, et cetera. So we are also the same technology we've built has actually been replicated within services as well. So we allow the same customizability within the service segment as well. Yeah.
Yeah, sure. We have another questions. How do you ensure the quality of the delivered products? I understand that you guys you've worked on your delivery platform, and this is something that differentiates you versus a talabat, for instance, delivering cakes. And so if you can elaborate on how you can control the quality, and is there any return refund policy? Someone's asking as well.
Okay. So that's a good question. So first and foremost, yeah, so as you rightfully said, one thing that kind of differentiates us from your usual talabats and Zomatos and all is that, you know, most of the orders that they do are through, at least in this region, in this market, is through motorbikes, right, which are not suitable for a cake. You know, one speed bump and that's it, the cake goes bam. So what we've collaborated with delivery partners who have car as well as van experience. We do a cross check of the delivery partner. So we have this model called 75-25, right? So what we do is with these delivery companies, we have 75% of the orders going to our dedicated delivery fleet, which we've leased from these partners, and 25% on a per order basis. Because in the event market, especially, you know, you have Eid, Christmas, summer, and then you have morning time, and then you have afternoon time and evening time. So what we realize is, you know, unlike food, where the orders, you know, keep going on, in the event business, the orders can go up and down. So it made sense for us to kind of partly in-house and partly outsource. But at the same time, what we're trying to do is we even the outsource partner, we make sure that they are up to a mark. So we give them test deliveries, and we make sure they have, you know, temperature control. So whether it's going by cars or vans, it has to be temperature controlled so the good goes in you know, good condition. And we have contracts with them as well. So let's say if there is, you know, regarding the refund process, as you're mentioning, if the good goes, if the item goes, reaches the end destination in a bad state, obviously they're entitled to either reward points to make another order or a refund of their amount as well.
Sure. So so basically the bulk is by using dedicated in-house delivery, and that's how we can control the delivery, the timing, and also track it.
Yeah.
Okay.
Even with the outsource partner, all the drivers have applications. So they have apps just like food apps do. And I think that's also what differentiates from the different gift shops is most of them, they just do the delivery. I remember one delivery company was saying, yeah, your order will get there between 9 a.m. to 4 p.m. and there's no visibility on it, right? So we're giving the customer visibility and being able to track from end to end, and the drivers can update the status, and even the bakeries or the party shops can confirm, yes, we have this available, let's accept the order. So it's all automated. Yeah.
Okay, great. Is there any high level metrics on the number of customers per month, or, you know, the purchasing powers, just generally speaking, as we speak right now? And if you can touch on whether you guys are breaking even and profitable, what's the latest update?
So we've not, to be quite frank, we've not reached a break-even stage, but we've done a financial forecast model, which we're happy to share with everybody. And based on detailed forecast model, we expect to break even by 2023. You know, considering we be able to raise the funds. But in terms of any other metrics that we have, yeah. So see, based on our limited budget, we've still been able to reach over 50,000. We've 50,000 downloads. We have almost 120,000 visitors coming up, and we gradually grew our number of orders. I mean, we only started 2019. 2019, we started our beta launch, which we did it only in Dubai with family friends. 2020 is when we actually had the alpha launch, where we started, going to Dubai as well as the rest of UAE as well. We were able to do the same in the same year. But since then, we've been able to get orders increase on a monthly basis, starting off getting 2 orders, 5 orders, 7 orders, 10 orders, 20 orders, and now we're surpassing that on a month-by-month basis as well. So and just to answer your question regarding the revenue, our average ticket size, and let's go to gifting side first, because celebrations is 2 markets, right? Celebrations is gifting and it's events. So when it comes to gifting, let's take cakes, for example, right? Because that's our most sold product, being the differentiator in the market. So we have the average ticket size will be like 110 to 130 dirhams. And then people tend to add on balloons and party items. So on the 110, we make the commissions, as mentioned earlier. And then on the balloons and party items, we make markups, because that's our fries and Coke to our burger, right? So we get these products on very low margins, and we make pretty good revenues on that. So our average ticket size then eventually increases to like 150, 160, but that's in gifting. Now we opened parties as well, and we're growing further into that. And there, the average price goes from 1,500 to even 3,000. So I take maybe somewhere between that as the average ticket size for parties.
Okay, thanks. Somebody was asking about SLA breach, if you can share any.
Yeah. So as mentioned earlier, we have SLAs with our vendors. So each of our vendors have a certain amount of time where they have to come back and accept or reject orders. We have SLAs with our delivery providers as well, where they have to meet a certain amount of certain standard, or they have to refund the amount as well. And we kind of provide that SLA back to the customer as well. So look, if it's a customized cake, we do take money beforehand, because a bakery needs to bake that item out of scratch. But if it's a ready-made item, we also accept cash on delivery. The system automatically detects what is ready-made and what's not. But with the customer, we've outlined terms and conditions, as well as privacy policy based on the EU standards. And in case of any things that fall within customer refund within the confines of this customer refunds, we then do proceed with that, or give you gift points so that you can order something else equivalent of that amount.
Okay, perfect.
Yeah.
Thanks a lot for joining us again tonight. We're gonna wrap it up right now. So these were all the questions. So for everybody joining us tonight, please make sure to join to access these proposals via the links on the platform or here on chat. One thing to mention about Shugah, however, is that they're in early access, which means there's a 15% discount that applies to your investments as it stands. So you can hurry up and invest before they go live. So thanks again for joining us. If you have any questions as well, please email investors@eureeca.com or myself. You guys may have known my email, and it will be circulated after this webinar. Thanks again.